Welcome to a live insurance update. I'm Pramod Sharma, the actuary at Taxevity Insurance, and beside me I've got someone. Who are you and what are you doing here?
I'm Jeevan Sharma, and I'm the Director of Client Services here at Taxevity Insurance.
Yeah, so today we're doing a live stream to bring you up to date on what's been happening in the world of life and health insurance. And because of the environment we've been in, it's actually been a lot. So Emerson said that once a mind is stretched by a new idea, it never returns to its original dimensions. And our minds have been stretched considerably by COVID 19, not just the disease, but the adjustments that have occurred as a result of it. So here's just a few things that tie in with the world of insurance. So there's a lot more online shopping. We've certainly seen that. In the insurance world, it's a little bit different though, because you can buy insurance online, but only the most basic products. So typically that would be term life insurance, for example. And the drawback of buying insurance online is while it may be convenient, there are risks that are transferred to the buyers. And so it's up to the buyer then to decide whether the product is suitable, to select the right coverage period. And with term life insurance, that can be tricky because if you need the insurance longer than you thought you did, then that can be very expensive. And also to compare more than price. So when you're starting off looking at something and you don't know anything about the differences, looking at price seems like the way to make a decision. But with insurance, you're actually buying a guarantee in the form of a contract. Price is not the best measure of what you're getting, but it's hard to know if you're just comparing online. So the good thing is that when using an advisor, there's no extra charge for the advice that's available. So while a lot of things can be done online, it doesn't mean that everything needs to be or should be done online. Buy before you try. This is something that's different too. Prior to COVID, you could go and you could see items in stores and then decide. So think of things like desks and chairs, where for a period of time you would need to buy them without having actually had the chance to see them in person. And then you'd find out that if you wanted to return them, they would be tough to repack. And while the returns might be free, there might be penalties such as you having to pay the shipping. So that's something that happened. But when you are buying online, you can look at online reviews. So that's a way to help make sure you're making the right decision. With insurance, that isn't possible. There are really no reviews to be read, and that puts the onus on the buyer to be extra careful. It's easy to cancel insurance, but it isn't easy to replace insurance because premiums do increase with age and also if health deteriorates. We've seen supply chain disruptions all over the place, whether people can buy cars and all sorts of other items that you wouldn't expect to be relying
Yeah.
so heavily on microchips. The insurance industry was also affected. There were adjustments when insurance companies switched to having people work from home. In the beginning, it seemed like some of these things couldn't even be done, but it was possible, though it did take an adjustment period. Insurance relies on assessing health, and a big part of that is paramedical examinations, where a paramedic comes and does various testing. And what we saw is that it wasn't possible to have paramedical exams for months and months. So that was a tricky thing. And as a result, it wasn't possible to collect body fluids. The good thing is that insurers realize that either they can sell insurance without some of the medical requirements they previously had, or they could stop selling insurance. And luckily, they decided to keep selling insurance and made the underwriting more liberal. And maybe that'll be permanent. That would be ideal. They also relied on clients to self-report things like their height, weight, and smoking status. So that's a little bit different because that would have normally been done by an independent person. So that could cause some issues at claim time because it was not verified independently. So it's important to be accurate in the information provided. And finally, the insurers allocated resources to modernization. And so we got a lot of things in a period of months that would have taken years and years otherwise. Necessity was a great driver
Mhm.
for change. Also, there used to be a bias towards in-person meetings, and that disappeared. Now people can see that in-person is not optimal in all situations, and that virtual meetings can be better for the attendees. They can be shorter. So when we met in person, meetings would normally be like an hour or so, and now they could be like 15 minutes or 20 minutes, whatever
Hmm.
is needed.
Exactly.
It's a lot more convenient because there's no travel time. It's a lot easier for people to see, because before we'd have paper and then people are looking at things, and if there's more than one
Yeah.
person, they're on different pages and the fonts are small, whatever. But on a screen, it's the size that people want. Audio is not an issue. People can set the volume to the level they want. And if something happens, as we've seen, things can certainly happen, then it's very easy to schedule and reschedule a meeting. And this works best if the content is already designed for screens. And the bonus is that we're also helping the environment by reducing our carbon footprint by not traveling as much. Now let's look at the insurance sector.
Yeah. So I'll take over for this section. So looking back at 2021 first, there are some items to consider. So when COVID-19 really started to spread, um, insurers, because they couldn't perform the paramedical exams, as Pramod mentioned, had to change their underwriting requirements to be more lenient if they wanted to continue to do business during that time. And many of those adjustments have remained. So the main one being that there's a lower need for bodily fluids, and the amount of insurance that would trigger the necessity for a paramedical exam or fluid collection, etc., has been increased in some cases. Now that electronic applications and deliveries and contracts are becoming more of the norm, it has reduced the amount of human error that's occurring, because these automated systems make it more or less impossible to make a mistake. Though they can happen, they're much harder than was previously the case with paper applications, and there's no more room for misinterpretation of handwriting, particularly if a client had to fill in a section and uh, they had somewhat difficult cursive to read.
Yeah. And in the past, we'd have issues such as we didn't bring the form for
Mhm.
scuba diving because we didn't know the client scuba dived.
Yes,
And then we need that form. So, how do you get it filled out? But with an online application, that question will just pop up and the form will be right there.
exactly, exactly. Or at the very least, it'll have a prompt saying, "Download this form," and you need to submit that before we can review the case. There's something at least, and of course, you can download it from the insurer's site very easily. Um, so and there has been some product innovation. So companies that only had one kind of whole life insurance, i.e., ones that were weighted towards having higher values later in life, have added some products that now have a higher value earlier in life, which is competitive for certain strategies, and for older clients as well, because they may not necessarily have the time to wait for those previous policies to appreciate in value over the course of 30 years. They may need something with a relatively good value in the next 10 to 15 years. Other than that, because there are more webinars, there's less travel, and we have attended many non-local events as a result of that, which has helped with learning and just keeping up to date on what's going on in the industry. Um, in addition, people are a year older now, so because insurance increases with age, and it also depends on health. Um, it's important to get it while you can, and at lower rates, because waiting is never an advantage in these situations. So getting something of lower cost today can save you from getting something that's much more expensive later down the line, if you can get it at all.
Yeah, that also sounds a lot like house buying these days.
Yes, yes, that's a very good comparison. So looking forward for 2022, in terms of price increases, we've been keeping an eye out for those. The thing is, many products already transfer a lot of risk to the client, so you could say that insurers are making the margin they were looking for anyway. So there may not be any increases just yet. So, for example, with term life insurance, most clients cancel their coverage before there's a claim, which makes it fairly profitable for the insurer. Or if for whatever reason their health deteriorates over the course of that term, they will be forced to keep that insurance. If it's for say for 10 years, then after that 10-year period, it renews for rates that are typically double or more for the next 10 years, etc. And if you have a policy renew twice, the client is easily paying, anywhere from 4 to 10 times the original premium.
Yeah, and realistically, they would have canceled the coverage, so the insurance
Yes,
company isn't on the risk anymore.
yes. So really, no matter what happens, the insurance company is winning on that type of policy, which isn't to say it's valuable because it is a fairly inexpensive way to hedge against an unlikely but extremely devastating risk, that being mortality. And with permanent life insurance, for example, universal life or whole life, where there is policy growth due to an investment component, any risks associated with that investment are transferred to the client. Now, the magnitude of that risk does vary. For instance, universal life can be more risky than whole life, but the opposite is also true depending on the circumstances. So there is a little bit of nuance there. And any changes to death claims or inflation or tax increases can be passed on. Again, depending on the type of insurance. So with participating whole life insurance, that is absolutely the case.
Right. So we didn't include the graphs here, but there are graphs that the Canadian Institute of Actuaries has put together from their research showing how death claims have spiked at different points during COVID. And so for a product where the risk of death is spread among policyholders, such as with Par Whole Life, it doesn't really affect the insurance company. With a non-participating product or universal life, it would if the claims end up being higher than those that were expected.
Right.
So those are things that people don't necessarily think about that can be considerations if the goal is to transfer as much risk as possible to the insurance company rather than to absorb some of that risk in the hope of getting some rewards if results are better than projected.
Precisely. Performance decreases. This is always a consideration, not just in insurance, but I'd say across the board in the financial sector. So dividend scale interest rates, which are most commonly tied with participating whole life products, may drop and continue to drop for the next few years. Um, and it's important to look at non-guaranteed variables in the calculations of these sorts of products. The only issue, of course, being that insurers don't disclose that. However, uh, because the interest rates do play a role in how much a client actually receives in a non-par, or sorry, in a par or participating whole life policy, any decrease there will negatively impact the client's experience in their policy. So there are ways that insurers can get around this, but only for so long. And at some point, uh, the impact of these dropping rates will be shown. And it's not just one insurer where that's this is happening. It's really across the board due to the way the markets have fluctuated in the past 5 years. So within taxability,
Okay, so let's take a look at some of the things that have happened in our world. So we closed our physical office at the end of December, and it made sense to do that because we haven't had any meetings there since COVID started. It's still our mailing address, and we do have a virtual office there. So once meetings can take place in person, we can have a physical office or a boardroom that we can have meetings in. And because we're working from home, we've also been upgrading our equipment. So we've got standing desks, etc. And today, because it's very, very cold, I think the best thing we have are the under desk heaters, which are really nice for keeping us a little bit warmer than would be possible otherwise.
agreed.
And Jeevan, this is an area that you've been working on. So
Yes.
what's been happening here?
So we're always improving and building upon the template we have. We have essentially one massive slide deck that we then cut down based on each individual client's needs. So as a result, we've added some things there. For instance, we've added more or clearer examples of what the different kinds of risk are. The four main ones being shown in this little mini slide here, and we've also focused more on how someone a client can embrace opportunity with permanent whole life insurance, and there's a whole list of those here which we won't read through right now.
Yeah,
In
because
addition to more diagrams, especially for corporate clients, where we're explaining how exactly they can get the death benefit out of their corporation and the advantages of owning a policy corporately, of which there are many.
right, because when it comes to insurance, there are people who say they don't need it because they have financial stability, etc. And the bulk of our market is helping people in those situations because when they see what insurance is able to do for them, then they sometimes decide that they want it for those advantages. And it's not just always driven by the protection, even though financial planning says everything needs to be needs based.
Yes.
In real life, that isn't what happens.
Yes. So I think this
Yeah.
one's for you.
Okay. Either one of us can talk about almost any slide. So when COVID struck, then we were trying to figure out what we should be doing. So we reduced the amount of content we created because we're just trying to figure out what was needed. And then we saw people got tired of Zoom and and attention spans got shorter, etc. And also you needed content that's different for different platforms. So we've restarted creating content. This live stream is an example. And we've also got weekly videos that we're circulating on charitable giving on different platforms. So you can follow us on LinkedIn or Twitter or Facebook or YouTube to see what we're creating there. And also our practice grew. So although we weren't able to meet people, we were able to add more advisors as collaborators and hence more clients. And we also expanded our service area. So in the past, we'd get requests from other provinces. We're based in Ontario, Toronto, Mississauga, and we get requests from advisors or clients in other places saying, "Hey, can you help?" And we were focused geographically, but now because of video technology, we don't need to be. So we're able to help people in more provinces than we did before. And wow, I'm getting too many slides.
Yeah.
Okay, and also an area that we invested a lot of time in last year was improving our resources on charitable giving, and that included joining the Canadian Association of Gift Planners. So we're active in the Willpower campaign, which helps Canadians understand that they don't have to decide between leaving money for their family and leaving money for charity. They can actually do both, and in part that's because the tax system is quite generous for donations. And we've also joined other things, and we've created a landing spot on our website where we'll be posting more and more of this content. Now, preview of 2022.
Okay, I
Do you
guess
want to
this
talk about
one.
this one?
Uh, I think this one might be better for you too.
Okay, okay. We try and divvy things
Yeah.
up so that it's both of us talking. But this is actually Jeevan in this presentation too. So for the Estate Planning Council of Canada, next month we are doing a Zoom webinar for them. And although it just shows me, it'll be Jeevan also. And the format that we'll have will be kind of like a rapid question format. So we won't be talking for a long time about one thing, but we'll be covering lots of little questions that come up. And that session will also be interactive so that the audience can ask their questions. And we generally find that there are good questions that come from that group. So if you're interested, then you can just look up this information and we'd be happy to see you there next month. And we've also been working on new presentations for philanthropy. We'll likely share these as future live streams. And the way to find out first would be to just follow us on LinkedIn if you're not already, or on YouTube or Facebook or Twitter. So we've got three presentations that we have close to being ready. One is for donors, another is for charities, and a third is for advisors, because each of them has different interests and focuses. So we're trying to create one presentation for everyone, but we realize that it's better to have things that are more focused for different audiences. And so if you're interested in that, that's coming soon. Now, questions.
Yeah.
Yeah, questions are a little bit tricky in this format because we are multi-streaming on 4 different platforms. So you can watch us on, chances are it's on LinkedIn Live, but we're also on YouTube Live, Facebook Live, and Twitter Live. So it gets hard to see all the questions that are coming in. So if you do have questions, then please do reach out to us and we would be happy to answer them. Is there something that you wanted to mention before we go to the wrap up?
Um, I think everything else that we'd want that I would think of, we'll probably cover in one of our upcoming webinars. I think we have a series of 3 more planned at least, where we'll talk about varying subjects. So at this time, I think that's everything.
Okay, so we'll just go to our summary. So when a paradigm shifts, everybody goes back to zero. COVID-19 has caused a huge shift in the world, but that doesn't mean we have to stay at zero. We can take advantage of the new changes and the opportunities that arise after we've taken the opportunity to protect ourselves. So thank you very much for attending our session today. We hope that you got value from it. And if you have any comments you'd like to share with us, then please reach out. We are here to help.
Thank you.
Okay, so it looks like it